only just in positive territory, up around 0.2%. We were up a little earlier today, much higher, around 0.5% or so, but we did start the day off on a negative note. Do you think we could maintain this positive momentum into tomorrow's session? Yeah,
Eleni, on the face of it, it looks like we're underperforming global markets right now, but you've got to remember we sold off quite hard on Friday. We did have a late afternoon rally on Friday. At these current levels, we're about 800 points off our Friday lows. So we are bouncing. Pretty much global markets have just kind of recovered as to where they sold off on Friday. The themes of the market at the moment continue to be global growth fears and Eurozone debt issues. And the big key factor for this week, I think what the markets are going to pretty much be put on hold for is the Jackson Hole symposium this Friday, where Bernanke is expected to give some sort of clue as to what he's going to do in terms of stimulus, whether he announces QE3 or QE in other forms. So what have you got your money on, Richard? What do you think is going to play out later on this week? Oh, not sure, Eleni, whether he's going to do QE or not, but whether he does QE or not, we think that what they may do is they may decide to roll the assets that they have purchased to longer maturities. Basically, it's pretty much QE under stealth, without anybody knowing. They're going to be rolling the shorter dated bonds into the further dated bonds with hope to keep longer term interest rates lower. Let's touch on the top 40 now. Harmony at the top of the top 40, up 4.6%. Yes, a much higher gold price, but then also some news from Papua New Guinea that they could be looking into terms of land repatriation. Do you think that is a big fear? Because we've got very similar debates ongoing here in South Africa. We've got debates going on in Zimbabwe as well, and it seems that most economies are trying to capitalize further on the resources that they have. Yeah, definitely a fear, Lenny. When it comes to governments in Africa, you can't be guaranteed of anything. It is dangerous. On Friday, there were rumors circulating the market that the finance or the mining minister had put forward a proposal for land reforms, and Harmony was sold off 5% on the back of that. So today we're seeing a bounce in the Harmony share price based on the statements put out by Harmony today. Truworths is up 3.7%. It's one of the best performing companies on the top 40 today. And one of the reasons could perhaps be that we've got an interest rate outlook that's changing rapidly. Some say that we could even see a cut going forward. We've got CPI data later on this week. What is your sense about the strong movement to the upside today? Definitely a bit of all of that, Eleni. Truworths did announce a good set of results. Headline earnings up 21% that they announced last week. But in terms of the performance today, I think that's more of a play towards the interest rate sensitive stocks. You're seeing the banks rally today. You're seeing the retailers very strong today. And I think that's on the back of, the markets are now pricing in the potential for us to have an interest rate cut, where we were thinking of hikes coming up early next year. Let's touch on the platinum miners, a sector that hasn't been very loved since the beginning of the year. From a share price perspective, we've been seeing a bit of pressure. This sector seems to be doing quite well, except for Aquarius Platinum. We know we've also heard negative news when it comes to indigenization in Zimbabwe. What is your sense? A good time to get in? Yeah, Eleni, I mean, Aquarius specifically today, one of their proposals to the Zimbabwean government were rejected. So I think that's why they're under the pressure that they're under today. But in terms of the platinum sector overall, they've got a couple big hurdles that they're having to face at the moment. They've got rising costs, wage inflation, an underperforming platinum price as well. If you look at the platinum price relative to the other metals, it has underperformed. And I think all these factors are basically holding the stocks back. If you look at what the stocks are trading at versus what they're earning, they are very expensive compared to some of their peers in the similar sector. For example, the Anglos and Billitons, the diversified miners, are sitting on PE ratios below 10, whereas Impala and Platinum are sitting on PE ratios in the region of 20 times. So the earnings just aren't there at the moment. Let's touch on BHP Billiton. It's down 0.4%, and of course concluding the deal with PetroHawk. Your sense on the diversified miners, the play between BHP and the likes of Anglo American? Yeah, interesting one, Eleni. Anglos and Billiton haven't been tracking each other all that well. Anglo seems to be underperforming Billiton. Billiton seems to be the preferred stock at the moment, and the only thing we can kind of attribute it to this at the moment is the fact that Anglo has a bigger exposure to South Africa than Billiton does, and we think that that's a bit of the nationalisation effect coming into play here. People rather go for a Billiton where they have very little exposure to South Africa and eliminate that potential risk over Anglos. And of course, let's quickly touch on Absa. It's down 3% in today's session. Went ex-div 292 cents a share. Yes, apps are down on the day because it is ex-div, but the banking sector overall holding up pretty well today, having a nice rally, and we think that's once again based on the interest rate sensitive stocks having a bit of a rally because interest rate markets seem to be pricing in the potential for a cut, possibly even this year.